So in this video, we'll be showing you clips from 5 different videos from our pre-seen analysis pack. And the first clip is from the pre-seen analysis series. It's vital that you fully analyze your pre-seen, and this requires a detailed examination of the case study, ensuring that every section is fully understood. So our pre-seen analysis video provides a page-by-page analysis of every section of the pre-seen, and it ensures you don't miss anything important, and it helps you to build a comprehensive understanding of the material. And this is vital if you're going to gain high marks in the exam. So in this clip, we've taken a section from our pre-seen analysis video series.
We're going to switch our focus now and focus on the organisation itself at Leothayre and its operations, what it's all about as an organisation, the composition of its board and its board's responsibilities. So quite a lot for us to look into, and this is probably more relevant for you than perhaps the previous couple of videos when we were looking more generically and holistically about the industry. We're now focusing on Leothayre itself. So this is the organisation you're actually working for in the role that you're playing in the pre-seen. So you're a senior financial manager working at Leothayre. So it's important to understand the operations of the company and the background of the company. We'll also see the specific operations that it undertakes. So in the earlier videos when we were looking at the operations that happen within the satellite industry, we were somewhat speculating on what Leothayre may or may not do. But in this video, we're going to know exactly or find out exactly what they do. And that will then allow us to think about, well, we know that these other operations happen within the industry. Is there a reason why Leothayre perhaps doesn't do it? And is there an opportunity there for the organisation to do it? So I've somewhat summarised that there by saying our missing one's an opportunity. I'm thinking about our SWOT and putting together our SWOT analysis. But I've also mentioned ANSOFs here because ANSOFs can also be useful for identifying potential ideas and strategies for the company. Remember, as a senior finance manager, that is your role. But also, it's useful for identifying the level of risk in opportunities as well. So, for example, something that is a complete diversification strategy, new markets, new services, etc., that's really, really high risk. Whereas something that is building on existing products, existing services with existing customers is low risk. And things in between are generally categorized as medium risk. So a product service development strategy or a market development strategy. So let's take a look at the organization then. So it was founded in 2024, so it's just over 20 years old. So this is relatively young compared to quite a few of the pre-seen companies in the past. Often they are very long-standing legacy organizations that have been around for 50, 60, 70 years. So this one is relatively young by comparison, and it's only been traded on the stock exchange for the last 7-8 years. So it's a much newer organization, has only been on the stock market for a few years. So what we may find when we look later and we see the stock prices, etc., that it may be fluctuating quite a bit, or it may have started off very high as perhaps there was a lot of enthusiasm about tech companies and satellite companies a few years ago that somewhat waned as technology hasn't advanced quite as quickly as maybe people wondered where it would be. People talking about going to Mars 5-10 years ago and how it was going to take at least 5-10 years to get there, and here we are 5-10 years later and we don't really seem to be any closer to it, etc. But when you are a listed company, that is a strength of the company. Now, of course, there are flip sides to that, as in you do have extra regulations and you have shareholders to appease, and sometimes you can't sacrifice returns and maximizing shareholder value in exchange for prospective future growth and future success. So that is a downside, but from a strength perspective, you've got more prestige in the organization. If you're a young engineer leaving university, Leothayre is perhaps this big stock exchanged company that's listed on the stock market rather than some startup where you're not sure whether it's going to even exist in 6 weeks' time, that sort of thing. So it's good from a recruitment perspective and a prestige perspective as well. And also it means that if you do need to raise funds, if you do need to really invest in massive, large infrastructure projects to really push the business forward in the future, you can go to the market to raise additional equity funding. And the actual operations of which the organization undertakes is to provide complete satellite services for clients, specializing in small satellites from 1 kilogram to 75 kilograms. So this means that Leothayre specializes in the nano and micro satellites. But it also does everything, the whole range of services for those nano and micro satellites. So complete service, including the initial consultation, designing it, launching it, and operating it as well. So thinking about the ground operations as well, and analyzing the data, recording the data, receiving data from the satellite. So of course the obvious thing when we're thinking about potential opportunities and strategic growth for the organization is initially looking at, well, what about the other sizes? What about the larger ones, the mini satellites? What about the smaller ones, the pico satellites, etc.? Is there opportunity there for the organization? Particularly as perhaps the pocket cube type satellites become more and more prevalent, that opens us up to a wider range of clients, a wider range of services. Now, of course, for those smaller clients, they might not be able to afford the complete package in terms of the consultations, etc. But perhaps there are more generic ones that can be offered that do specific things for hobbyists and for universities and research sites, for example. And also, when we look at the complete service that we provide to our clients, that obviously means that very important to us that we have a whole range of services. It means that we're very knowledgeable across the entire supply chain of the operations of the satellite industry. And it means we provide a service that we have more control over. So for example, if we did the initial consultation, but we outsourced the design of the satellite, we'd then be adding a layer of complexity into it. So that may not be something that we would want to do. On the other hand, it could be that maybe we're having problems with the design. Maybe we're having problems with the ground operations. Are there potentials to maximize what we do best by outsourcing parts of those services? So again, not saying we should do that, but we're just speculating about things that we could do. And on the other hand, if we are an organization that has this complete service, could we diversify our revenue by, in a sense, providing an outsourced service? So are there other companies that are great at the consultation and the design phase, but they're not very good at the building? Could we if we got the capacity, could we build some of their satellites for them and charge a premium for it? Then we're diversifying our revenue. We're not necessarily relying on people coming to us for a whole service. We're also getting the revenue for building satellites for other companies as well. Or other companies that have got the satellites, but they don't have the ground source sites and the operations. So we provide a service for that as well. These are other ways of diversifying our own revenue stream. In the next 2 paragraphs, we are introduced to specialist workers at Leothayre's organizations. We have the engineers and we also have the workshop staff. And these are people with a certain degree of technical knowledge and expertise. And this is not the kind of knowledge and expertise that you could maybe just go down the local job centre and find, there's 10 satellite engineers that are waiting for work. So when you know that it's a very, very specialist job very niche area, even says here specialist area. It's not like someone who is just a skilled engineer who builds railway bridges or something like that. Admittedly, very skilled engineer, but it's not the right engineering knowledge and skills for building satellites. So when you have a situation like that, what it does is it grants far more power to your staff and increased reliance on your staff. That you have to keep your staff happy, you have to have systems in place to recruit and retain the best possible people, because that has a direct impact on your performance as an organization. This isn't administrative staff or marketing staff where there are always going to be lots of other people from lots of different industries that are always available to recruit. It's a very niche, specialized area. So that grants staff more power, but it also means that you have to make sure you have policies and principles and procedures in place for recruiting and retaining the best possible staff as well. And of course, as an ethical company, as a responsible company, you'd want to do that anyway, because organizations should want to take care of their staff. But it's an important point to raise here, given the specialism that these staff have, the specialist knowledge and expertise that these staff have. And it's not only important for producing the end results, as in the right satellites, etc. It's also about recommending suitable solutions for the clients. The clients won't want to overpay for things that they didn't need to pay for. If you get some of your calculations and your recommendations wrong, as you can see, this has implication for the size of the satellite and therefore the cost of launching it into the orbit. If you make the satellite unnecessarily large, it's going to cost far more to launch. It's then going to cost far more for the client, and they're not going to be too happy about that. So it's important not just for the actual creation of the satellite, but it's also creation for the full service that is offered to the client. The client, of course, is also going to be a very important stakeholder. And just while we're on the subject of staffing issues, just a key exam tip for you. Staffing issues with keeping staff happy, with their remuneration, with their motivation, with any issues relating to restructuring and change management, all those sorts of things. Really, really common, important issues in the exam. So just as a key exam tip for you there, that staffing issues are very important. And we've already started to delve into a bit about how important our staff are for us and the nature of the roles that they have within the organization.
Next up, we've got a clip from our strategic analysis. It's extremely important that you have the ability to identify how the pre-seen relates to key models and theory, and the examiners will expect students to demonstrate a good understanding of the models and theories and make the appropriate links to the case study during the exam. It can be hard to fully analyze a company using models you've only recently learned and be confident that you've got it right. So our strategic analysis has done that hard work for you. So in this clip, we're going to take a look at our strategic analysis video.
So let's begin now by looking at the mission for Leothayre, looking at ultimately what the organization wants to achieve, what its goals are for the future, because that's of course very important. The mission of the organization is essentially the direction it's heading. If we ironically think about GPS and we think about navigation, we need to define where we're actually going in order to figure out the best route to get there. And so the mission should ultimately serve as something that provides a common purpose for all stakeholders, everyone involved in the organization, so they've got a roadmap of where they are heading. We need to look at what the organization is all about, and we can do that using the mission, vision, and values provided. So, for example, if we look at the purpose of Leothayre, why does it exist? Who does it exist for? And what sort of what is the organization hoping to achieve in the long term? Well, if we look at the Pre-seen, the mission of Leothayre was to lead in the creation and operation of satellites that meet the needs of clients for space-based facilities. So it exists to meet the needs of clients. So that's a really important thing to bear in mind when we're talking about strategies, when you're analyzing the suitability of any option or any strategy. Is this actually helping the organization to create satellites? Is it helping them to meet the needs of clients? And if something you're about to propose is going to go against the wishes of clients or is not going to necessarily help us to perpetually deliver quality to our clients, then maybe you have to seriously consider whether that's something you should be suggesting, because our purpose is to ensure that we are meeting the needs of clients. You also think about the vision of the company as well. Space-based facilities that can enhance the quality of life on Earth. So we're now putting those together, a few things there, to create satellites, to operate satellites, to meet clients' needs, to enhance life on Earth. So a classic example of something that might go against that is maybe some sort of military purpose that's going to be used to help identify targets and direct missiles appropriately. Is that enhancing quality of life on Earth? Are we really making the world a better place by allowing the military to be able to launch satellites more accurate, to launch missiles more accurately, etc.? When we're thinking about what the organization is about, is how the organization is competing, the range of businesses it is operating within. And at the moment, it's in the micro and the nano satellite industry. But we know that there are multiple other ways in which it could compete. Could it offer things that its competitors are not doing? So, for example, the increase in pico and femto satellites, the very, very small ones, and the advancement from CubeSats to pocket cubes. Could we operate in that to improve our efficiencies, to deal with more clients, to diversify our client range as well? That might be useful. Also, what the organization is about. What are its values? So, for example, if we look at the values of Leothayre, it's to be excellent. It's to be innovative, to adapt to clients' needs, to be fair, to be respectful, to build strong relationships, and to act with integrity. Now, that might sound like just the kinds of list you'd see on a company site, and it's just some stuff that was given in the Pre-seen, but actually that needs to be really, really important for you. When you are answering questions in your exam from the perspective of a senior finance manager working the finance function within Leothayre, you need to make sure that those values are being represented in your decision making, and that you are doing something that is building on those, that is strengthening those values and not going against those values. And all of this ultimately ties in with the policies and making sure that you have policies within your organization. There's no mention of policies within the company, but there should be policies within your organization, within Leothayre, that are making sure that everyone who's involved, all the engineers, all the staff members working in different divisions, whether it's marketing, finance, human resources, everything, are acting according to this purpose, these strategies, these values. So we know that the organization wants to create satellites, they want to meet needs, they want to enhance quality, and they want to be excellent, innovative, fair, and act with integrity in everything that they do in order to achieve that mission and those visions. So that's really, really important. That's a foundation of all your decision making, is to act in regards to that purpose, that strategy, and those values. So when we think about the organization then, if we think that's what it wants to achieve, how is it going to measure its performance of how well it's doing to meet those needs, in addition to meeting the other needs that as a public organization it will simply have to meet along the way as well, including making sure its staff are satisfied, making sure its clients are satisfied, make sure it's delivering returns to its shareholders, etc. Well, the balanced scorecard is probably a great way of doing that. You'll be familiar with this, for starters, from your CIMA syllabus, but also because it's more, as the name suggests, balanced. It's not just focusing on, oh, well, we need to make sure we've made this much profit, or we need to make sure that we've done this one thing here. It balances a range of different measures across different categories within the business. Now, the disadvantage of that is sometimes it can lead to a loss of leadership focus. If you're trying to focus on improving 100 metrics, it's very difficult to improve any of those metrics. Whereas it's sometimes better to pick a few, focus on them, and really focus on building those. And then once you have improved those, you move on to the next one. So a breakdown of the scorecard is as follows. You have naturally the financial perspective, very, very important for any organization. But then you have the learning perspective, also known as the growth perspective. How are you developing the business? How is Leothayre growing its business to make sure it is becoming this leading company that's creating satellites and meeting needs and enhancing life on Earth? You then need to think about your internal perspective, your operations, how efficient you are working as an organization, and how your clients are reacting to what you're doing. Because, of course, we value our clients. We want to meet our clients' needs. So the client perspective is very important there. Now, financial perspective, key measurements and KPIs from that would be looking at your measurement, looking at your profit, your cash flow. Cash flow, a real issue for this sort of company because of the lead time on its projects. It's not like an organization that is manufacturing 1,000 consumer goods on Monday, putting them in stores on Tuesday, selling them on Wednesday. It's a big company with big projects that may last for many, many months, 12 to 18 months, etc. And you'll need to work on those projects. So costs will be accumulated throughout those projects before you formally recognize the revenue that from creating the project. And of course, you've got provisions in there for customers and clients to pay at certain points when certain things are done. But if there's delays in meeting certain milestones, you can't delay your costs because of that. You can't not pay your engineers because we haven't met the milestones yet. So it's very important to think about the cash flow of this business to ensure that it's got budgeted for cash flow, budgeted for negative cash flow situations. And also return on investment as an innovative company as well. If it's developing new technologies, developing new standards, etc., it needs to make sure it's getting a return on that. From a learning perspective, Leothayre could look at the number of new innovations it has introduced. It could look at new markets and new clients, etc. It could also look at the amount it's spending on training and research and development. Those would be good indicators of its growth, on how much it's investing in its growth. Now, of course, that's not to say that you're doing well just because you're spending money. You have to be spending it in the right areas. So that's why you might want to look at the number of new innovations actually created, number of new patents or anything like that. Something where you've got some tangible outcome of your learning. For internal perspective, things like completing jobs on time, that's very important for the organization. That's one of its big selling points, is why it's got a good reputation, is its success rate, it's on time, on budget. Retaining your staff and making sure that they're satisfied. We know from the articles in the pre-seen that there's a lot of demand for such a niche role, and therefore that grants a lot of power to the actual employees themselves, and therefore you want to be making sure you're retaining those stuff, making sure keeping that expertise within the business. They're not going off to Orbital Link or any of our other competitors. Think about our impact on the environment, how that ties in with rules, ties in with regulations. Articles about space junk, for example, as well, suggest it could be an important thing. Health and safety as well. You're thinking about the actual operations of the organization. There may not be too much dangerous work going on the day-to-day, but when you think about you're actually launching satellites and they're falling from the Earth, are you running the risk of debris hitting individuals or causing damage to other satellites, etc.? That's all very important as well. And finally, your customers. How many customers keep coming back? If you've got a shelf life of a satellite that you've launched for 5 years, how many of those customers at the end of those 5 years are coming back to get you to do the satellite again, or are they taking their business elsewhere? How satisfied are they? What's our market share? These are all good indicators of our clients and meeting our clients' needs.
We're casting the net a little bit wider now with a look at the wider industry in which the Pre-seen company operates, with our industry analysis video. It is critical to demonstrate to the examiner that you have fully understood the pre-seen industry as a key element to gaining extra high marks in your case study exam. Researching the industry can be a laborious process, especially when you're not sure which information is useful and which isn't. And our team has spent hours doing this research for you, finding the information that will help you to achieve a wider perspective of the industry and build a deeper knowledge in preparation for your exam. So in this next clip, we'll be taking a look at our industry analysis video.
And we are going to start at the beginning, which is famously a very good place to start, with chapter 1, which is on how to use this analysis. Now, there's nothing here that is that crazy, but I want to highlight a few things for you here. So first off, the examiner's report, which says that it wants an awareness of the industry that the business is in, because this will help you to think of the wider issues that might impact on the decisions that you might be asked to comment on. So that is why we've made this guide. That is what we are here for. We are here to give you an awareness of this industry. Now, another key thing to bear in mind is your role. So you are, and you, that is the person who's sitting the exam, are a senior manager in Leothayre's finance function. You report directly to the board and you advise on special projects and strategic matters. That's your role. Important to keep that in mind as you do everything. And finally, I wanted to talk a little bit more about what we've done here, what this industry guide is. So, obviously, as we've spoken about, the examiners are looking for you to have a wide range of sound knowledge of the relevant industry and to demonstrate that during your exam. Now, that is quite difficult. You don't have much time and you don't know whether you are going to be able to find the really key stuff in the time that you do have to research the industry. But don't worry, we have done it for you. So what we've done is we've scoured the web, we've scoured journals and magazines, and what we've essentially done is found what we know to be the most relevant information for your exam. We've collected all of it, we've put it here in one place. So for you to get ready to know the industry, you don't have to go online and find all these things yourself. All you need to do is read this guide and read it thoroughly. And while I'm here, I might as well say that this video is not really a complete substitute for reading the guide. All we're going to do is read the key areas. I'm going to pick out some key bits for you, but in general, it's good to go back in your own time and have a look at the whole guide because we're barely going to be able to cover, well, I don't know, even a quarter of it. So there's going to be lots more information available for you to find in this guide, and I would recommend you do so. Okay, so with that introduction out of the way, let's move on to chapter 2. And this is going to be an introduction to the satellite industry. And in contrast to some of the other industries you might have come up against as you've gone through the various levels of the CIMA syllabus and through the various case studies, the satellite industry is fairly new. So we can say that it only really starts to come about, well, in fact, we can say very definitively that the start of the satellite industry is in the 1900s. It's when Sputnik is launched up into space by the USSR, and we then have the start of the satellite industry, and really the start of the space industry, as it's kind of come to be known as now. But the key thing here is that stuff is rapidly evolving. So we've had a spectacular evolution of satellites over the last few years, and ever since their inception in the 1950s. And yeah, what they are used for today is slightly different to what the original uses of satellites were. And the key thing really here is internet connections. So something, if you've been looking at the news at all, that you would have found impossible to avoid is the seemingly constant news on Starlink, on Elon Musk's satellite launching company. And that really is what Starlink does. So Starlink is providing internet solutions for people in remote areas for whatever reason. But yeah, that is really where the industry is going towards. It's a big part of the industry at the moment. But satellites are also used for predicting severe weather and for monitoring climate change. And they can also even be used for things like helping farmers optimize crop yields. So, you might think of a satellite as something really expensive, something that maybe only a government can pay for. And actually, increasingly, we are finding that isn't the case. So yeah, we're no longer looking at eye-watering budgets. I mean, let me assure you, the budgets are still eye-watering for a normal person like me or maybe you. But yeah, they are. It's becoming more affordable for these big companies, for these big ventures to get satellites and to get satellite support. But yeah, the key thing is this rapid evolution. We're seeing some serious change in how things are operating, and this takes us quite nicely onto the history of satellites, because this is in contrast to the past. And what we can see here is that satellites in the past were very large, and we'll see increasingly that this is no longer the case. But that they were also designed primarily for military and communication purposes. Now, I want you to think of the space race here, of the USSR versus the USA. They're not launching stuff up into space just for the fun of it, just because they, want to push the boundaries of what they can do. Really, everything during that time is part of this big arms race, is part of this big kind of military build-up, and so that is what the first satellites were for. Whether they explicitly could do that, or whether it was the idea of what the future military potential would be, that is why they launched Sputnik, and that is why America scrambled to join them in the space race. And that's why the moon landing happened, essentially, is because of that confrontation. But that is not what we're talking about today. We are focusing just on satellites. Let me stick to the topic. So yeah, as I was saying, the big shift has been in size and cost. So we can now say that satellites today are a fraction of the size and also a fraction of the cost. This is often the case with technology, as I'm sure you're aware of. It might not feel like it with the new iPhone prices, but when things are first invented, they're super expensive and often super chunky. Think of the first computers, think of the first IBM computers. And as time goes on, technology gets cheaper and it also gets smaller and smaller. This isn't always the case, but yeah, in general, it does. And this is exactly what has happened with the satellite industry. So yeah, we are now at a point where satellites are relatively cheap to launch. Now, they're not cheap, I've already said this, but relatively compared to what they were in the past, they have definitely got a lot cheaper. And the other thing that has happened in the modern day landscape is that satellites have got much smaller. So the focus is on small satellites and CubeSats. Now, this photo here is what a CubeSat might look like. Full disclosure, I'm fairly sure this image is AI generated, but I've done my research and they do indeed look like this. But yeah, these CubeSats, which are the kind of current zeitgeist, they are very, very small. These sorts of satellites could fit in your hand, so they're proper tiny, and often get launched up into low Earth orbit. So these aren't the sort of satellites that are going to stay up in orbit for decades or whatever, like the old satellites would have done. These satellites go up easily, they go up quickly, but they also tend to come down quickly, and we're going to get onto that a little bit more later. But just to kind of help you wrap your head around this. This satellite, the kind of standard cube satellite, as we said, could fit in your hand. Well, Sputnik 3, which was a super early Soviet satellite, was around 4 meters long, so pretty big, but sort of significantly bigger than a cube satellite, but also weighed 1,300 kilograms. Now, I can assure you, you wouldn't be able to hold 1,300 kilograms in your hand. So we're seeing a serious case of miniaturization in the satellite industry. Okay, so that is the excerpt of the history we're going to talk about. Next up is the industry life cycle. I am going to leave that largely for you to have a look at. I'm just briefly going to draw your attention to, oops, sorry, we've gone past it. I'm just briefly going to draw your attention to this section here, which is about the growth phase, which we are arguably, I would say we definitely actually with the satellite industry are in the growth phase. And we can see this by the fact that the small satellite sector, in particular, is experiencing explosive growth at the moment. So there is a real rising demand for high-speed internet, as we've spoken about, for data gathering, and also for sophisticated imaging solutions. Also for these CubeSats and these nanosatellites. And the CubeSats are called CubeSats just because they are in the shapes of cubes, of small cubes, modular cubes that you can join together to make different types of satellites. And nanosatellites, as the name suggests, are just small satellites. But yeah, we are looking at a serious boom, and we will be able to look at a little bit more of that later when we look at some industry examples, but the numbers are looking like they are going to be crazy for the satellite sector. So yeah, that is the phase we're in. I will leave you to look at the rest of the industry life cycle in your own time. So if we apply that to the pre-seen, if we start thinking about Leothayre here, we can say that Leothayre has really done really well after this shift towards small satellites and CubeSats. This has been an opportunity for Leothayre to expand its operations and diversify its product offerings. And yeah, we could say that the Leothayre standard, which is the main product that Leothayre makes, is a versatile cube satellite. So it is doing really well to kind of stay up to date with the current trends. So far, so good. Leothayre has managed to really ride this wave of small satellites and the kind of the general trend of the industry. And also it has as its main offering a versatile cube satellite. So yeah, in terms of applications of the pre-seen, we can say that Leothayre is really in line with this historical context.
The next clip is taken from one of our most popular videos, the top 10 issues. The top 10 issues video identifies the 10 most likely issues to appear in the exam based on our expertise and experience in this area. And our expert gives guidance on how to deal with the issues in your answers, provides advice on which models to use, and key points that you should raise. Based on our experience of analysing CIMA case studies for over 10 years, our predictions have been extremely accurate in previous exams, with around 70 to 80% of topics in the real exams being covered in our top 10 lists. So take a look now at this clip from our top 10 issues video.
Number 10, which as I've already alluded to, was an issue, is funding. Now, funding is very, very important. It's a key F3 topic, and this covers your cost of capital. This covers your financial analysis. It covers your debt funding, your equity funding. It's something that is commonly examined. In fact, it appears mostly every single time, but it generally will appear as part of another question, or what as I call an add-on. And what I mean by that is you won't necessarily be given an explicit question asking you about funding and asking you to explain funding, etc. But it's part of any question that is relevant to a new project, to an acquisition, to investing in new training, or whatever it might be. You need to, as part of your guide that's specifically given to you by CIMA, is explain how it's going to be funded and to speculate and to recommend a suitable source of funding. So that's why it's such an important issue, because it is relevant to more than just questions about funding itself. It's also relevant to any question where you're going to need to fund something. So that's why it's such a key topic and why it's something that will be relevant to your exam. And also, given the nature of the industry, given the amount of, say, assets needed for an organization, the amount needed in research and development. Remember, there's almost 8 billion Wexen dollars in assets for this company. Lots of funding is going to be needed for big, large-scale investment projects if the company is looking to grow, is looking to expand. And so that's exactly what kinds of issues might arise. A big long-term funding requirement for new projects, or to generally grow and expand, aggressively expand across the globe, or to fund an acquisition. But also something related to short-term working capital. Those of you that watch the pre-seen videos will know that I mentioned working capital and cash flow as a potential risk for this business because of the long lead times with the projects, and also the fact that they had so many expenses. Of course, things like staff, you can't just not pay your staff, but you might not get paid for still certain milestones in any project, yet you've had to spend a lot of money in producing that project. Although, saying that, the receivable days were actually quite low in the case. But it's still an important thing, particularly given that the current ratio was under 1 and the interest cover was under 2. So that suggests that the short-term liquidity is not that great at this organization. And so I've mentioned that there, that cash flow budgeting is going to be critical. Negative cash flows on a monthly basis might need to be planned for, making sure that you have significant buffer cash to pay for bills, to pay for expenses, to pay for salaries, etc., to ensure that you are covered. They do have a fair amount of cash in the bank, 551 million Wexen dollars. But remember, a lot of that is already going to be perhaps earmarked for that cash flow budgeting. And also, you think about the trade payables the organization has, almost $1 billion Wexen dollars in trade payables that may fall due. So a lot of that cash is going to be needed for paying off those trade payables and also paying for general working capital. So what I mean by that is, don't go into your exam and say, oh, well, the organization has 551 million available to invest. Let's just invest in this project that's 500 million Wexen dollars. So please be aware of that. The debt funding is also quite high across the organization. Depending on which method you use, the gearing was over 100% or just over 50%. So that will make it perhaps higher to raise additional debt funding, but there is a significant, almost 8 billion Wexen dollars in tangible assets that could be potentially used to raise debt against. Now, of course, you have to remember that we don't want to be using that security in a way that is prohibiting our usage of it, because we need those assets to actually carry out our operations. So relevant theory here could be to discuss the advantages and the disadvantages of debt versus equity if you were needing to raise a huge amount of funding for a large-scale project. Classic advantages of debt funding is that it's far quicker and it's generally quite low cost. You just go and you get additional funding, you extend your lines of credit, etc. Whereas equity funding is very, very expensive. You want to go to the market to raise new funding, and of course you've got to get permission from your existing shareholders and offer them the first options, etc., because it could otherwise dilute their shareholding. But on the other hand, with equity, it's useful to raise a large amount of capital, and you also have no actual need to pay it back. Now, I know we do pay dividends, but dividends in theory are actually optional, whereas interest payments, your finance costs, are not. And of course, depending on their size, the lenders, equity providers are going to be stakeholders that you need to categorize, stakeholders you need to be aware of in your Mendelow's matrix.
Our final clip is from our mini mock debrief video. We produce a range of mock exams for each sitting, and alongside each of those mocks is a video debrief. And in these debrief videos, our experienced tutor analyzes every question and takes you through a step-by-step guide on the best way to approach them. And by watching debrief videos, you'll learn to understand how to pick out all of the key information in the task and the requirements. You'll use that information to build an effective plan. Many students fail due to poor answer planning. And then that will help you to formulate an excellent answer. So in our sample video, the tutor will take you through question 1 of the mini mock.
And just going to start by looking, as you might expect, at the first question. Now, of course, you'll notice that these are 30-minute questions rather than the actual exam, where you will have 60-minute questions, because these are half-size questions as it is the mini-mock. But that time is still important. We need to factor in how much time we're going to spend on each subtask based on the time that we have available as a whole. Now, first thing I would say is always make sure you allocate at least 25% of your time to planning. And that might sound like a lot of time, and that might be time where you're thinking, well, I'd be better off writing, but it's far easier to write a decent answer from a good plan than it is to write a decent answer on a blank screen, even if you've got more time. So, of course, based on 25%, for 30 minutes, we'd actually only have around about 7 or 8 minutes to plan, and probably going to take longer than that because I'm doing this for demonstrative purposes, but that's still something to be aware of. Now, the first thing I would actually do if you've got a question like this, and this is quite representative of the types of questions you might receive, it would be an email or a memo or something like that, is I would immediately scroll down to the requirement lines. Now, the reason why this is important is because the requirement lines, A, tell us what we actually need to do, and they give us the time breakdown. So, for example, how much time we have to spend on each of the particular tasks. And that will also give us an indication of how many marks are available. And that's what CIMA themselves have said, is the percentage time is also reflective of the marks. So, for example, this is a half-size question. So if we think of this as around about 16 to 17 marks, half of what an actual question would be worth, we can then split by the 60 and 40%. and that gives us roughly 10 marks for subtask A and 7 marks for subtask B. And that's important to note because there's no point in, say, writing 10 marks worth of content for subtask B when there's only 7 marks available. Likewise, if we split them into 2 and said let's do 8 marks for each, well, we'd be writing 1 mark too much for subtask B. We're never going to get more than 7 marks for it, and we'd be losing out on potential marks for subtask A, which has up to 10 marks available. They didn't actually used to do this. They brought this in a few years ago, so before you actually had to use your own interpretation of the questions to think which one was the most important. But also, back to why we're looking at the requirement lines here, is that it helps us to learn what we're actually looking for. So we need to conduct an evaluation of the viability of a proposed project for Leothayre on the assumption that we use our usual cost of capital of 8%. We then need to recommend a way to move forward with this project, including justifications and key strategic actions. So we now know what we need to do. We need to evaluate a project and recommend whether we go ahead with it or not, and the key actions. So when we look at the rest of the reference material, and we look at the rest of the question, etc., we know what we're looking for. Because if we just looked at it, if we just say, all right, we've got our question here. So the board has identified a potential opportunity to establish a special satellite engineering college in Wexford. Okay, so this might mean X, this might mean Y. Now, to be fair, this is quite a tight question, but it could be far vaguer, far more ambiguous. In which case, if we're just looking through saying, well, this could be a question about this, and if so, I need to mention points X, Y, Z. You might waste lots of your time looking through and analysing the content, analysing the material, before you even know what you're actually supposed to do with it. So by looking at the requirement line first, you are pinpointing and highlighting what you actually need to do. And then when you go back and look at the rest of the material, you're looking at it with regards to understanding the viability of this proposed project. So, for example, we're looking at that. Satellite Engineering and Technological College. Okay, what's the viability of that? Well, that's something that we haven't done before. We are a company that consults and builds and launches satellites, etc. We've never taught people on satellite engineering, etc. So that's why it may not be viable, for example. We don't have that knowledge necessarily. So that's how you might start analysing it. But what I would actually do is I would look at these requirement lines and start building your plan, building your structure and the various different headers already. So for example, with an evaluation of a viability, I would say that suitability, acceptability, feasibility is going to be a great model to use there. And it has natural jumping off points for us. There's the suitability to the strategy of Leothayre, the suitability to the mission and the values, the acceptability to the stakeholders, the resources, the cost involved. And then with the second part, we need to have our recommendation, we need to then put our justifications in, we then need to put our strategic actions in. So you can see we've already started to build quite a structure for this answer. And that's ultimately the aim of what we want to do. We want to create a nice structure around it. So let's go back and look a bit more at the question. The institution would provide training and apprenticeships in key areas such as satellite designs, orbital mechanics, signal processing and software development. It would be in central city, given the size, access to talent, and also the proximity to several of our key clients and our operations. So think about acceptability to our stakeholders. It's not necessarily going to affect our clients, for example. And it follows an initiative from the Industry Insight Unit. So with that in mind, let's take a look at the reference material. Now, one thing I want to make clear is that when you've got reference material given to you in the exam, CIMA expect you to use it. They expect you to, pardon the pun, reference it in your answers, because that's why they have given it to you. They've specifically provided this extra material for this question because they expect you to use it in your answers. So what information have we got here in the Insight report? Well, a key finding was the growing demand for skilled professionals in the satellite engineering sector. Projections indicate that demand will outpace supply by 2032. Now, we also know from the pre-seen, so again, if we're talking about bringing in pre-seen information here, that this is also the case in the pre-seen. The pre-seen specifically said that the amount of satellites is going to increase from 10,000 to 70,000 in the next decade. There was already talk of other university programs starting up to basically help deal with this knowledge and skills gap. So we know that it's something that is happening in the pre-seen. And to address the national skills shortage and the falling number of graduates in STEM programs, the Wexford government has announced a subsidy program for organisations offering training and apprenticeships in these high-tech industries. So that's another reason why it might be suitable, why it might be viable for us, is we're going to get subsidies from that. Training is currently limited, because often the university education and institutions are far too academic without really focusing on the practicalities. And so we recommend establishing a small to medium scale college dedicated to this. We'll provide hands-on training in key areas and offer placement and job opportunities both during and after program completion. Now, this is a very important thing to mention as well, because if we think about the industry, we think about the skills gaps, what that essentially makes or means for us as Leothayre is that there's potential risks over employees. And having access to the right amount of staff, the right level of staff training, the right level of skills and expertise. We don't want to have these staff, these engineers, workshop staff, etc., moving on to Orbalink or moving on to one of our other competitors. So one way in which we can think of this as well, why it might be beneficial for us, is almost creating an employee pipeline where we are training the next generation of Leothayre employees. So it helps to mitigate that other risk as well with regards to staff, and also may also diversify the amount of diversify our revenue streams, because we are then getting additional revenue from people paying to come to this college. So some real advantages for doing that. Now, of course, the disadvantages being that this is not something we've necessarily done. We don't necessarily have the skills and expertise. Yes, we're experts in satellites and things like that, but there's a huge difference between running an organization that builds satellites and training new students in physics and in satellite mechanics. It's a big difference. So we would need to acquire more knowledge. That's one of the things that we have to think about when we think about feasibility. So you can see I've summarized some of those key issues there. Also just saying, with these subsidies, it does make it a good time to enter the market. But what about the actual costs of undertaking it? Well, we can see that it requires investment of 80 million Wexton dollars for the first few years. But it does ultimately, according to at least the net present value, when we think about investment appraisal, it does add value. It's adding a return above required by the shareholders. So in theory, it is something that is going to satisfy the shareholders. In theory, it's going to be something that is going to generate additional value for the organization. Now, of course, there are some assumptions here that it's going to infinity, that it's going to be there forever, that these costs aren't going to change dramatically, etc. But on the face of it, it is a good thing. But a couple of things that we have to consider here is the cost of it. Now, that's 240 million Wexton dollars. We have 551 million Wexton dollars in the bank. So you might say, well, that's easily affordable. We can do that. But remember that our trade payables are almost $1 billion. Remember that our current ratio is under 1. Remember the long lead times of the projects and all the salaries that we've got to pay, all our working capital requirements. We can't just say that we've got this much money to invest. Now, if we are just investing 80 million a year, then it might be okay, but we do need to consider where the funding is going to come from. Are we going to part fund it with cash? Are we going to then part fund it with debt? But then our debt is now very, very high. You know, if you look at those liquidity ratios, the current ratio, very low, the gearing ratio over 100%. Very difficult to add too much additional debt funding to this organization. Also, another key consideration here is the cost of capital. Now we're using the usual cost of capital 8%. It specifically said that in the question. But there's a problem with that. And that problem is all to do with a point we've already raised here. The needs of the college being different. The fact that we might need to gain additional expertise because it's not something we've currently done. Now, the usual cost of capital is the usual cost you use to discount when it is a project you are familiar with, or it's something you've done time and time again. And it's generally considered prudent to use a higher discount factor when analyzing a project where it's something that is perhaps higher risk, something you are less familiar with, to take into account the fact that it is higher risk. This is something we have not done before. And therefore, we are likely to run into problems that we perhaps haven't predicted at this point. So a higher cost of capital is usually prudent. So as you can see, we've got quite a few points to add to our plan now. We've looked at the various different reference material. We've looked at various different parts of the pre-seen as well, or we've discussed various different parts of the pre-seen. So what we're now going to do is switch over to a different screen to run through what would be a draft plan for this answer. So as you can see, we've got our mini mock up now, and we're going to look at task 1 first, because that's the one we've just looked at, where we had our breakdown of evaluation, that was 10 marks, and our recommendation, that was 7 marks. So we're looking for 10 and 7 marks respectively, and we might break down our evaluation by assessing the suitability. So we have the knowledge of satellites, but we don't necessarily have the knowledge of running a college, and so we need to gain that knowledge. We factor in that it's a high risk, it's a new market, it's a new service, but it does help us to diversify our revenue stream, which is one of the risks mentioned in the risk report, that we were very dependent on a select group of clients. There are also government subsidies that make it an appropriate time to enter the market as well. With regards to acceptability, shareholders, if they're going to like it, if it's going to make more money, if it's going to add value to the organization, and employees are not likely to be too threatened by it, because it's not like we are replacing them. We are, in a sense, almost giving them the opportunity to grow within the company, because, of course, if we've got new pipeline of employees coming in, that means that there's opportunity for promotions, opportunities for them to take on teams. Other stakeholders, like our clients, not likely to be too dramatically impacted by it, provided the quality remains there. And it's also something that the Insight unit themselves has suggested. Though I did mention here about this cost of capital, yes, it's a positive net present value, but is it an appropriate cost of capital given that we are undertaking a project that is not something that is familiar with us? Because there is a lack of knowledge there. We do have the cash at the moment, but there is going to be working capital requirements. Again, that's one thing that's perhaps not been specifically mentioned in the case, but is going to be very important. So we need to think about where we're going to get that financing, that resourcing from. Are we going to part fund it by cash? Are we going to make sure that we have a certain amount of cash available each year to invest in this project, particularly given that it will be hard to raise additional debt financing? And then for the recommendation, we might say yes, provided that we do a new cost of capital, we re-revise the net present value, and that it's still positive. But there is a lot of justification for it. It's an appropriate time to enter. It does help to diversify our revenue. It does help us to create this employee pipeline for the future, to overcome the skill shortage in the market perhaps, and also long-term profitability hopefully from it. And action points could be bringing together. These are really good action points. This is something you want in the exam because you can make them very quickly and easily. They can be quite generic, but they appear to be very strategic and very applied. So really good for earning extra marks. So calculating that new cost of capital, maybe using betas from actual colleges if there are any publicly traded colleges, etc., to help you with that. Set up a team. Get your board approval of how it's going to be funded, deciding on that, appoint a project leader, have milestones and review your progress throughout. And then also, once you've finished the project, do a post-completion audit of what went well, what didn't go so well, and what sort of lessons you can learn for the future. That's always an important strategic point, is to mention the importance of learning for the future. So that would be a really strong answer to this question.
So there we have it, 5 key videos to get you started with your exam preparation. I hope you found them useful, but the reality is that this is just the starting point and you'll need to do a lot more preparation over the next few weeks to improve your chances of passing this tricky exam. And to that end, we have a number of options available. The video clips you've just seen are taken from our course content. And our courses are designed to help you ultimately pass the exam. We want to minimize your study time. And of course, we want to ensure that you're getting your value for your money. So if you want more of what you saw today, you want to check out our full pre-seen analysis pack. And that basically includes the full videos from which those clips were taken. From the pre-seen analysis videos through to the top 10 analysis, the strategic analysis, industry analysis, and in addition to that, we've also got 30 pre-seen questions that are designed to help you consolidate your knowledge and understanding of the pre-seen company. Pre-seen analysis is a crucial first step, but passing the exam requires developing your exam technique and lots of practice. So the best all-round comprehensive solution is the Astranti Premium course. On that, in addition to everything you get in the pre-seen analysis pack, you'll also get 5 mock exams. And those mock exams are written according to the pre-seen company. They're not generic and they don't have generic solutions. They're applied to the pre-seen and they're based on the top 10 issues. So you'll get questions in the mock exam that they'll have a good chance of coming up in the real exam. In addition to those mock exams, you can get mock marking and feedback. And this is where you'll submit a mock exam to your dedicated marker and they will mark that and give you a fully annotated script with feedback and annotations. And they also provide a 9-page document with feedback that you can apply in your next mock. In addition to that, we've got our exam technique video series. Exam technique is really important in this exam. And so our exam technique video series has 13 chapter study texts and accompanying videos taking you through every aspect of exam technique, right from understanding the exam through to interpreting the requirements, answer planning, writing technique, and time management. Really valuable course that will help you a lot developing those soft skills that you need to do well in this exam. Alongside that, we have 3 live masterclasses that run throughout the course, from the first one that's looking at the pre-seen through to later ones that look more at exam technique and theory revision to help you get ready. Included in the premium, you get access to tutor and mentor support, and you'll be able to access our discussion hub where you can post your questions and talk with other students and tutors about any questions and queries you may have. And our premium course comes with our double pass guarantee, and that's exclusive to premium course students. It's a double guarantee because if you don't pass, if you take this course and you don't pass the exam, we'll give it you again for free with no extra charge. And you also have a 14-day money-back guarantee. So if after 14 days on the course you're not happy, you can get a refund, no questions asked. So whatever your situation, we believe we have the solution for you at Astranti, and you can find out more at astranti.com/CIMA. Thanks for watching.